Welcome back to the Market Minute, where we cover the basic market components that impact your investments and what you might expect when either purchasing or refinancing a home right here in Florida. My name's Brent Starts with Unitas Lending. Let's jump right in. Today is Wednesday, September 14th. As you may have heard, yesterday's CPI increase was above what was expected. They were anticipating 0.3 print, and it came in at 0.6. That moved inflation up higher than expectations. And we talked on our update on Monday. You want to lock ahead of those big print possibilities. In other words, a surprise in the marketplace. And that's exactly what happened. Right now, being Wednesday, the producer price index came out. And what that is the price of wholesale goods that in turn make consumer products. So it's a leading indicator of where inflation's going. So that figure came out this morning at 8:30, and it came in a little lighter than expected. The year-over-year figure last month in July, year-over-year was 9.8% increase in inflation on wholesale raw materials. And that figure came in at 8.7%. So that's good news. So we're still getting some stabilization from what happened yesterday. That was on every major news network last night. It was big news. The stock market dropped over 1,200 points. At one point, it was down almost 1,400 points. That's a big loss. Today's open. Everything opened pretty flat on all three indices. The Standard & Poor's 500, the Dow, the NASDAQ, all of them are pretty flat right now. And so that's what we're seeing this morning. The response is everyone's kind of getting settled into the possibility of a 100-point increase in the Fed funds rate, 100 basis points, as opposed to a 75 basis point hike in the September 21st meeting. So the advice, realtors, borrowers that are currently in escrow or buyers that are currently purchasing a home, right now, you want to lock anything that's within 30 days. You can lock where you can. Outside of that, again, our long-term stance is that inflation is going to start to slow the economy down. We'll see a recession, and they're going to have to put a pause on some of these rate hikes. The rate hikes that are anticipated are already pretty much baked into the rate sheets that we're seeing right now in mortgages. They respond right away, long before the Fed makes a decision. So that's already baked into the pie, if you will. So those rate hikes are coming, and they're already seen in the mortgage market. Right now, you're seeing interest rates just a tick over 6%. That's the first time we've seen rates that high in over 14 years. So it is substantial. That's going to slow down the market, which is probably a healthy thing after the last couple of years of unsustainable gains. So it's welcome news, actually, to have a normalized market where supply and demand are going to balance out a little better. Hopefully that creates some opportunities for those that are looking to purchase a home right now. If you found this information helpful, drop a like below. Again, my name is Brent Starts with Unitas Lending, and this has been your Market Minute.